Hello. How is everybody doing? Welcome to today's live stream. My name is John, Senior Market Analyst at 𝖢𝖥𝖣yi. Let me know if you can hear me and let me know if it's okay. A bit clunky today on the buttons, so I'm hoping you can hear me okay. I think I've turned the music down a little too much. There we go. So I can see some people in already. Ibrahim, welcome. You're the first one to comment. Hopefully the first one to like the stream. So thank you for that. Yeah, welcome to today's live stream. So Thanksgiving in the US. So US markets are going to be a little bit quieter this afternoon. So it gives us a chance to kind of have a little look at what's been going on in the market this week. We've got some really important data to kind of digest and go over. So there's some markets that are starting to produce a couple of things. We talked about a couple of opportunities on Tuesday, so I'll go over how those have been kind of playing out so far. I can't remember if we talked about pound yen on Tuesday, but pound yen was a market that we were definitely looking to get short on due to currency strength and weakness, as well as some other factors. Actually covered it in a video last week. That has come down nicely as well. So yeah, we're going to take a look at everything in this live stream today. So welcome to you, Vincent, as well. Thank you for letting me know you can hear me. Mr. Carson, thank you. And hello to you. Harmy, welcome. And hello to you as well, Ratish. So let's get into some data. Let's get into the like I always say, the boring stuff, which is we've got to know about, though, unfortunately, if you want to be successful. We've got to look at the macro. So let's dive into this first. Hello to you as well, Eddie. Welcome to the stream. So let's jump in. So what have we had going on for Wednesday and Thursday? Because obviously we don't stream on a Wednesday. I actually didn't stream Tuesday either. We did a stream on Monday. So there's been a lot of data that's come out since we last spoke. A couple of things to be aware of. We had CB consumer confidence, FOMC meeting minutes. Honestly, not too bothered by these at the moment. Not really anything to seriously digest. I think for me this week it was all about commodity currencies, especially the likes of the Australian dollar and the New Zealand dollar. Significant commitment of trader report signal on the New Zealand dollar at the moment. So looking for potential opportunities for a reversal on the downtrend. But we did get a significant cut by the RBNZ, cut interest rates by 50 basis points, and actually saw Kiwi dollar close higher. So that was something that I spoke about on Monday. I said if we get the RBNZ cutting interest rates, but Kiwi dollar closes higher, that could be a sign that there's a change of sentiment. Because not only did they say that 50 basis points was sort of the cut, they're talking about another 50 basis points early next year to cut as well. So more bearishness potentially to come to Kiwi, but at the moment, hedge funds are over leveraged to the downside. So they might have to try taking some of those positions off, which could cause a little bit of a Kiwi rally in the near term. So RBNZ cut interest rates. So that's something that we needed to know. GDP quarter on quarter came in at 2.8%. Unemployment claims still pretty good in the US. No revised figures there, which was interesting. Core PCE price index, so this is the preferred measure of inflation by the Federal Reserve. That came in at 0.3%, so not coming down in line with expectations. Again, that should have been positive dollar. It wasn't. Okay, so we're starting to see sentiment change a little bit, and there's a couple of correlations that I really like. So yeah, looking forward to that. German CPI month on month came in at minus 0.2%. Look, I've talked about this for what I feel like is months now. Eurozone isn't in great shape. Germany, not in great shape. Germany is the biggest economy within the Eurozone. Euro is not in good shape at all. However, hedge funds again are extremely short, and they may have to take off some of that positioning to either get in short again, okay, or to completely reverse their positions. I don't think they're going to completely reverse their positions. I actually had a bold statement about 6 months ago, thinking that euro dollar could be back at parity this year. We've only got a month left, so I'm hoping that we can kind of push that. But you know, I do feel like the euro is still in a very bad position. Some interesting data coming up later, though. Tokyo core CPI. I'm looking forward to that. If we get any kind of increases in CPI in Tokyo, might be a condition for the Bank of Japan to want to hike interest rates again. Yen strength could come from that. This is something that we've been speaking about again for the past few weeks. And then tomorrow we've got some GDP in Canada as well as the Bank of England governor speaking manufacturing PMI over in China. Oh, take a breath. Right, let's take a breath. That's all your economic calendar stuff out of the way. So we can get into something. Tell Blueberry Funded to do something, to do some of their giveaway here too. Honestly, I don't know what that is. So I don't know that they're doing a giveaway. But what I'll do is I will speak to the team here. Let me make a note. And I will see what I can do. Okay. I don't know what any of the things going on at the moment. So you'll have to let me know. Okay, so let's come out of this then, because we're going to go take a look at some fun stuff. We're going to take a look at some charts. Now, one interesting chart at the moment, or one interesting headline that's out in the markets at the minute, is a potential ceasefire between Israel and Hamas, right? So there's potential ceasefire in place at the moment. I don't know whether it has actually officially been announced as a ceasefire. I know there was something out a couple of days ago that there was, but I haven't really seen that floating around that it is official yet, because I know Israel have said that, look, if there's still a threat, they're still willing to attack. But this has kind of brought down the escalation in terms of the impact it could have on between Israel and Iran. Also oil, right? So this is crude oil futures at the moment, and on that data we've seen crude oil futures sell off. Okay, this is due to the fact that the escalation is de-escalating. So that to me is quite interesting, because oil prices are in a very interesting place, and we've got Donald Trump coming into power in the US, and he is an oil guy. So I think to make all of his oil friends happy, he would want to see oil prices move higher. However, obviously he wants lower inflation, and if you know the correlation between oil and inflation, then he'd want to see oil prices a bit lower. But what's quite interesting here at the moment is the market is coming into this key area of support. We are consolidating above support. I don't typically like that. Usually I like a strong bounce away, price comes back in, strong bounce away. Usually if price consolidates around a support point, you can break through it before the turn. So we might be getting something similar here right now. Price might break through, dip into the 60s, and then move back to the upside here. But oil prices are quite interesting at the moment, just to keep your eyes on. There's nothing from a commitment a trader point of view to have a look at in terms of oil at the moment. Let's have a quick look at crude oil. Let's see if there's anything building. There's nothing really building. We can see that they're starting to get a little bit more aggressive on side of being a buyer, right? So you can see hedge funds are still fairly short, but they're not short at any kind of extreme, which is the turning point for me in a market. So right now I still feel like oil prices could continue lower. Just to kind of have a quick snapshot of what's going on. Let me just open this page as well, and we can go down, have a little look at crude oil. Now it says that hedge funds are long, but they're not. If you look at the data, you can see that they're not long at all. I'm going to go back down. you can see that they're fairly short here. So yeah, I'm not typically interested in a reversal here right now. I want to see hedge funds get extremely short on this, and then I'll look at potentially being a buyer of that market. One interesting market though, or one potential coming up very soon. I don't know who trades, if anybody trades coffee here or have the ability to trade coffee, but I thought I'd just point this out from a futures market perspective. Coffee prices have gone astronomical recently, mainly due to some poor weather in Brazil, but they have spiked astronomically over the past sort of month or so, 34% higher. Now, looking at that, you may get some kind of FOMO of wanting to be involved in that. Well, it's interesting that price is doing that, because if we look at coffee futures and the commitment of trader reports, we can see that the commercials at the moment are shorting, and they're shorting aggressively, which is what they do at the top of trends. Hedge funds are buying and buying aggressively. So I'll be interested to see how the report comes out on Friday, whether we do see an increase in those, because if we do, then coffee could be in for a bit of a short-term pullback. So yeah, that's something to keep in mind. But let's have a little look at some of the ones that we looked at going into the start of this week. There were 2 or 3 that we were very interested in. One of those was being the New Zealand US dollar. We were looking for some kind of potential reversal on Kiwi, and the reason behind it is because of the aggressiveness from hedge funds. Again, they are short at historical levels. The last time they were this significantly short was back here for one, which was on the 27th of November in 2023. So the same sort of level as the previous year. And prior to that, it was around about the 18th of September. So you can see this was kind of where this area was here, and then it rebounded and price rallied. So looking for something very similar to that. Price is at a range low on New Zealand US dollar. So we'll just go on to the New Zealand futures. This is a zone that we were looking at. Okay, price has come into it now, and we had a strong reaction. So what I found quite interesting was we've got the RBNZ, the central bank in New Zealand, talking about cutting rates and getting, and potentially cutting rates again at the beginning of the year, and prices reversed here. This was also down to a little bit of a play on the US dollar as well, but this is the futures, and you can see we've got that nice sort of bullish rejection going on there. So I quite like Kiwi dollar long at the moment. I still need to wait for a couple of factors to come into play. Typically what I wait for is a break back above here on my stochastic for one, but I also like to see some kind of changes in trend. So at the moment, although we've got this really nice sort of divergence play where price has made lower lows and the stochastic has made a higher low, I ideally want to see price breach these highs. That would be more long-standing move. Looking at the 4-hour chart, we have started to get a really nice move developing. So we consolidated down here, okay, and we breached back to the upside. And look at the price action, okay. Now, price action has been very slow here. Now, it is Thanksgiving in the US, so volumes are a lot lower. Volatility is going to be a lot lower. So for me right now, I'm interested to see if this starts to play out here, because a very shallow consolidation after a strong move up could mean that price is going to continue to trade higher. So that's what I'm looking for at the moment. One thing that we can look to do is obviously apply support and resistance levels. Let me just change this back to Kiwi US dollar so it makes a little bit more sense. You can see that it's the same pricing essentially. Let me turn off session breaks there. But yeah, essentially you've got this kind of consolidation coming back, maybe even like a flag pattern, right? This extension move up. So if we kind of extend out of that, extend above this kind of 0.59 handle, I quite like that idea. Quite like that idea for a potential move to the upside. So I will be keeping a very close eye on the New Zealand dollar at the moment. 0.6 was a level that we looked at from seasonal analysis on Monday, where we talked about the potential for price to reach this from a seasonal analysis point of view. So that's kind of my immediate target to look at going into the end of this week, going into the start of next week. So yeah, keep an eye on this one. I quite like this one a lot. We've also had like a break of this trend line resistance. Things are starting to just kind of point more towards a reversal here. So I quite like this move that's forming in the market right now. Let's go have a look at pound yen then. So pound yen was a market that we discussed for some potential downside. Now, one of the reasons for that, so I've removed a lot of the thing because I was actually filming a video on pound yen for you guys that's being edited at the moment. But essentially what we had was this consolidation zone, right? After the large move, prices came back to this level, and this is just from a technical perspective right now. We had sort of like consolidation or sort of a triangle pattern being formed, or at least a squeeze on price. We broke to the downside. This is when I did a video that you can see on the channel discussing the potential downside of pound yen. Now, my overall target for this downward move is 190.50, which is sort of in and around the middle or towards the top of this sort of zone in here. My price did test 190.75. I actually shorted this this week. If I just go to the hourly chart, I'll show you how I did that. So we had this initial move down, right? Market consolidated and did exactly what my strategy setup was, right? So one of the strategy setups that I look for is if the 50 moving average, which is the blue line, and the 200 moving average are in line, okay? I look for a pullback in price, and that's what price did. It pulled back like this. I then look for a break in that trend, in that sort of pullback or that phase, which formed here. This is where I got short. I put a stop loss above the highs and I targeted 190.75. I actually took profits on this just before it hit that level. But if I hover my my sort of line over this, you can see the low was actually 190.67. Okay, so that was a nice move to have play out for me this week. There's been a couple of other markets that I quite like the look of at the moment. One of them has been the FTSE to the upside. Although the situation in the UK is not great in terms of growth, it's actually a really strong seasonal play that happens through the end of November into December for the FTSE. So I'm looking for a potential move there as well, but I'm not going to go into too much detail on that one. Let's have a little look at some other markets then. So another market of interest for us was the euro. Why was the euro of interest? Basically, we had another potential signal from the commitment of traders reports, right? Which was this in here. Okay, so hedge funds again starting to reach sort of extremes that we've previously seen on CAD futures. Okay, so I'm looking to potentially be a buyer, on euro futures. I'm looking to be a potential buyer of the euro. And again, I don't know whether this will be a strong reversal. Usually when you have the commercials on the opposite side, doing the same, like doing the opposite to what the hedge funds are doing, it does lead to a stronger reversal. But the situation in Europe is not great, so I don't see this move being like one that's going to see prices all the way back up to the 112s. I see this being a kind of short-term bounce, perhaps back up into the 110s. So if we just have a little look at euro dollar, we can see we're kind of breaking through this more accelerated trend line. We've had my sort of official sort of signal to that the price could be potentially reversing in terms of momentum. So what I typically do now is I'll look at my hourly chart and I'll look for opportunities. So market's rallied. We're kind of pulling back here at the minute, so I'm just waiting for some kind of change in this hourly trend, because I think if we get that, then that's when I want to be a potential buyer of this market as well. So keeping an eye on euro. It's not quite ready just yet, but we did talk about the potential reversal this week, and then because of those cut reports and whoops, I'm deleting all the wrong bits of technical analysis there. But you can see that we've kind of come into this low down towards the 1.0450s. Market has rebounded from that. So I'm just waiting to see, do we get that kind of move back up towards, like I said, the 110s, or maybe even the sort of 1.08s, where we've had this kind of consolidation, which on the daily chart, I guess, would be this sort of area here. Let me just drop a volume profile on that. Let's just see what levels are really kind of sticking out to us. So yeah, up towards that 1.0815. I think anything kind of in that zone there would be pretty ideal for a bit of a sort of reversal at that point. So that would be where I would be targeting this move. You've also got this kind of trend line confluence going through there as well. So if we do get that sort of breakout on the hourly, I'll be looking to try and trade prices. But I can see the 50 moving average on the daily as well is quite a way away from price at the moment. So, sometimes when that happens, price can kind of push towards it. So kind of looking at that move on euro US dollar to present itself at the moment. It's not, there's no trade here right now for me. So I'm just going to sit and wait for that. So really speaking, what we looked at this week, euro I quite like to the upside against the US dollar. I'm trying to look for areas where I think we could try and find value against other currencies. I'm struggling to do that. The only currency that I can see potentially we could look for a reversal on, one is potentially Euro Swiss. But yeah, price isn't doing too well there. The other was Euro Pound, but that hasn't done anything that I wanted to see in order to be a buyer of this market. So yeah, the euro, I like the opportunity to be a buyer of it, but against what currency, I don't know. Only I can kind of think of is the US dollar at the moment. And the main reason behind that is because of the correlation between the 5-year T notes and the dollar index. So if I just actually add this on to compare, get rid of this at the moment. So you've got your treasury notes. Now, treasury notes are quite similar to bonds in how they sort of work. They are, debt securities that are backed by the US government. So they are considered very safe investments, and they have an inverse correlation to the currency, right? So when you see the 5-year T-note futures contracts moving lower, you can see that the US dollar rallies. When the T-notes rally, you can see the US dollar falls, right? So this correlation here is something that I'm very interested in at the moment, especially because of the commitment of trader reports. So I'm trying to use the correlation between the 5-year T-note signal. And I mean, when I look at this, I just think this is a very interesting signal from the commitment of traders, because commercials, so they're you sort of hedgers within the markets, they are buying at levels we haven't seen in history, right? I can go all the way back to 1980 something, 85, and they're buying at levels we've never seen before. If I look at the hedge funds, they're shorting at levels I've never seen before or has ever been seen. So when you kind of look at that there, and then you look at where price is, we've gone pretty much sideways, right? Yet commercials has continued to build their longs. Hedge funds have continued to build their short positions. And now they're, at extremes. I mean, they've been at extremes since, you know, when we started to see these lows coming in, they've been at extremes since then. And the market has just pretty much sat between 105s and 110s. But if we were to see this eventually kind of give out and we were to see these T notes move higher, then the correlation between them and the US dollar is quite an interesting one. So I've been looking at the potential for these kind of T nodes to break higher. And if they do break higher, I've got a feeling that we're going to see the US dollar start to break lower. So that would mean like looking at our sort of euro dollar, our Kiwi dollar, our, you know, for longs, dollar CAD, for instance, for short. And I'm just, again, it's just kind of waiting to see if this does play out. We had this kind of channel, bearish channel running through. We've breached that now, starting to look like there is good evidence that this market could start to move higher. You know, I'd love to see this close as a bullish weekly close. So yeah, I think if we do get that and we start to see this move higher, then I'll be looking at to be a bear on the US dollar in the near future. Why do you watch the 5-year instead of the 2-year and 10-year? There's no difference there. Well, there is obviously a difference. It's the maturity is the difference. The only difference is the COP signal. Okay, so if I go and look at the 10-year Treasury notes, right, and we open those out, we're not seeing as, you know, aggressive shorts from the hedge funds as there was previously, right? So that, yes, we're starting to see that build up there, but there's not as much information on the 10 years as there is the 5. So I'm looking at more the 5-year situation, which is nice because that's kind of, you know, midterm over the sort of short term of 2-year and long term of 10-year. So that's why I'm kind of looking more towards these ones at the moment. But again, you have to take it all with context. You know, if this does start to break out higher, you know, we should likely see the 10-year move in the same way as well. You know, if we look at the T-bond futures, they're moving higher. 10-year T-notes moving higher as well. So they all kind of move, you know, pretty much in sync. If we were to see those move up, then it kind of points to the same thing, really, of the US dollar moving lower. So keeping an eye on that, right? You know, we've got this price of the US dollar index coming up into the 106, the 107 area, which is this big resistance level. You know, I just kind of highlight this from the futures point of view. Big resistance level up here, starting to see that kind of weekly bearish close. I mean, that's going to be the first bearish close we've had since the end of September. You know, dollar's been on a very strong run. Was this a bearish week? Okay, there was a bearish week on the 28th of October, but a very minor one before seeing that. So it's going to be the first bearish close in 4 weeks after a very, very strong run on the US dollar. So I'll be interested to see how price holds at these levels, you know, because I felt like we've still got to see some kind of breakdown. I mean, it looks to me like we could potentially try and plot like a bit of a head and shoulders play here. You know, maybe a move back up towards the 107. And if it kind of breaks back above the 107, then we're probably going to continue to trade higher here. But I just don't see that at the moment. But it could happen, right? Nothing's guaranteed in this game. So it could happen at all. The probability of it happening is probably less likely than the head and shoulders play in here. So I would like to see, you know, some kind of move like this go forward. Do you use VWAP, SMA, 20, 50? I use exponential moving averages. I use the 50 and the 200. I do like the VWAP, but that is for me more of a day trading indicator. So when I used to trade Euro futures, I would use the VWAP as well as volume profile and market profile, all kind of blended together. So yeah, I would use all that information. So VWAP is quite good, and is better to be used in a futures market where you can actually get the volume data. It's difficult to do in CFDs using a VWAP. So if you're going to use things like volume, I would do it over on the futures markets rather than doing it on a CFD. What settings on the VWAP? Oh, this is a throwback. Let's have a quick look. Let me get it up. Actually, I don't know if I can get it on here anymore. Let's have a look. VWAP, there we go. So essentially what I would be looking at is, this must be my old settings on it. Let me get rid of that. There. I'll show you the old settings. So my VWAP would be a session VWAP. I would change the source of it to open, high, low, close 4. Okay. And I used band multipliers essentially. So you've got the band multiplier of 2. So that's basically your VWAP and then 2 offsets of that. And then a band multiplier of 3. So the way I would use it, let me just change the color so you can actually see this a little bit better. Let's change that to that. And let's change this to the blue. And change these to the blue as well. So essentially the way I would use this was, you know, let's just say you had your volume profile on your session, right? So you can see that price is trading within value today. Okay, so if I highlight where the value was of yesterday, this is your sort of value zone, right? So you have your value area high, value area low. If price is trading within the previous day's value, right, I'd be looking at more of a range-based day. So I'd be looking to be a buyer from the resistance bands, so your VWAP bands, right, back into VWAP, for instance, or I'd be looking to be a seller from the highs of the bands down to VWAP, essentially, because if price is trading within the previous day's value area, you are more likely to get a range-bound day. So I'd be looking to try and trade those sort of bands back to each other, a bit more of like a mean reversion style of trading there. If, however, right, let's say here, for instance, we have this day. Let's just plot the moving averages there. So this day here, you can see that we trade outside of the previous day's value, right? So I would be looking to be a buyer of this market if that was the case. And I'd be looking to try and buy it into the bands. So, you know, I'd be looking around my VWAP and I'd be looking to see how price reacted. And I'd be looking to try and buy into those VWAP bands, or into some kind of value here, right? So let's say there was this here, for instance. I can see that there was a volume cluster up here, right? So I'd be looking to potentially target that move, that little bit of volume up here, because sometimes market will go and test volume before moving off there. But that's the way I'd kind of use my VWAP bands. I'd be using them more on an intraday basis, and I'd be looking to try and see how price related to the previous day's value, and then go from there. The other way you could do it as well is use session volume profile. So you could look at sort of how, let's say, you have like the Asia session, so sort of overnight till 7 a.m. GMT, you know, be looking to see, does price break out of that? And then you've got your London session, let's just say 7 till, we'll go to the overlap, which is usually about 1 p.m, which is when you start to see the US kind of coming in online and stuff. Let me get rid of that. Sometimes trading view can be a little bit buggy when it comes to drawing the volume profile. So let me go to 1 p.m. there. So again, you can see like in the US session, we're starting to break out of the London session value, or the London session sort of range. Let's say that's the whole range, but the volume range, we're starting to break out of that. So I probably would have been looking to be a continuation or a buyer of that if price stayed above it, essentially. But yeah, VWAP's pretty good. You know, I also like a VWAP that an anchored VWAP. So an anchored VWAP is when sort of price is moving and you can anchor it to a high or a low. It kind of helps you identify potential re-entry opportunities on a trend. So let's say, for instance, here, right, we'll just replay it back to this moment, right, and you notice that price failed to break yesterday's highs, come back in. Maybe you know, just, I don't know, but maybe you want to be short this market. You can anchor a VWAP to the high of there, and basically it'll kind of monitor the distribution of orders through there. So you could be, you know, as you play it on, you could be looking at retests of your anchored VWAP for intraday entries to the downside. So that's the way I'd be using my VWAP. I'd be looking at sort of my lower bands as the sort of target points for price. But yeah, this is how we used to use it on Euro futures, you know, or you kind of look for divergence plays. So when price came in here, for instance, you can see that price makes a lower low, but we make a higher low there. So if I noticed that on a 5 minute, I'd be down on like a tick chart or a minute chart looking for breaks in trend, trying to buy it back to the moving average, or the VWAP. Okay. So you can also use it in that way as well, if that's something you're interested in. But if you want the settings, these are the settings that I use. They're just the standard settings, but I'd make sure you change the source to open high, low close 4. And make sure your anchor periods on session. Okay. And I'd be looking to use that on the futures market. But remember, if you don't have the data, you have to buy the data for the futures market. Otherwise, it's 10 minutes delayed. Mr. Carson, would you continue to short pound yen? That's a very good question. Potentially, if everything still remains the same in terms of fundamentals and whatnot, then I don't see a reason why not. The only reason I would be a little bit cautious of getting short again, I did think about it because I was looking at this hourly move, right? And I was looking at the potential for this to start breaking down, and I thought this would be a really good entry to get back in short. But the problem I've got is we're very, very close to support. So ideally, what I would like to see now, because we're kind of extended in this phase 1, or you know, your primary phase, so I like to call it the P1, and we're at a area of support. You know, I'm just being super cautious because we have bounced from it, but I still feel like there is some downside to this market. However, I look at it now and I start to think of risk and reward. You know, where am I going to have to put my risk and where's the reward in this trade, essentially? So if I go to the hourly, let's say theoretically we get what I'm looking for, and price, let's say, breaks this and closes below this trend line support. Let's say, okay, I want to entry then on the close, right? And I need my stop loss above the high. Now, I use ATRs on my stops. So my stop is 0.31, so it needs to be at least 30 pips above that high. So it needs to be at least 100 pips, maybe even 110 on the pips there. So my target has got to be these lows, or even the support. You could try and stretch it to 190.50, but ideally you want to be targeting an area where buyers have come back in. So my reward to risk ratio on that is pretty bad. If I want to try and extend this up, and you know, and I've got a good feeling that the market may, I mean, I say good feeling, it doesn't matter what your feelings are towards the market, but let's say, for instance, price rallies, fails to make a new high here, and on the 15-minute, right, let's say the market rallies back up into this area here, 15-minute double tops or does something, breaks trend there, right? Then at least I've got the option to get short with a better reward to risk ratio, because I'll still have to use my sort of 100, well, not 110 pips, but I still have to use my 30 pips above the highs, but that comes down from 40 to sort of 70 then. Okay, so still in around the same area as the previous stop would have been, but I can open it up a little bit by going down to a lower time frame, which gives me a better reward to risk ratio. So there's a couple of ways you can kind of think about it. You know, you can still be short in the trend. That's perfectly fine. Me personally right now, no, I'm not going to, just because I would like a deeper pullback now. Which I might miss out on this move. But I think if we start to see price closing back higher again, that's fine. And I'll be looking for something very similar to what happened here. You know, if the market starts making higher highs, higher lows on the candlesticks, I'll be looking for that potentially to turn. And then if we start to see that phase one coming back in, then I'll look to try and get short again, down towards this area. Again, happy to be out at this point, because in case it kind of skyrockets, but I'm happy to be out there. And if price then breaks through, then it opens the door up for a move lower, down towards these lows. I do like this short though. I think this is a very, you know, good market to look at. There's a lot to be said about growth in the UK versus growth in Japan, or growth expectations at least. So yeah, I do like this market to the downside. It's just, I think to get any kind of reward out of this now, you're going to have to go lower time frame, and you're going to have to, you know, maybe look at sort of this area up here where we've seen the sell-off. So, you know, I'd be going down to sort of a 15-minute time frame, and I'd be looking to see, you know, do you get pull back into this zone and then a breakout of that zone, something like that. It would have to be something like that, just to kind of help you with that reward to risk ratio. But I'm happy to leave that as is. I'm very much focused on two other markets, well, three actually. Euro, dollar, you know, happy to be looking at this. I've got an alert set above 1.0559 here, so I'm looking at this one. Kiwi dollar as well, you know, this is a very nice slow pullback in here. And also dollar CAD, very interesting in dollar CAD. I actually said in a video the other day that if price closes back below 141, I'll get short, and the price missed my entry by 3 pips. I had an entry up here, right? Was it here? No, actually it was this one. Sorry, it was this high. This high in here. I had my entry at these sort of bodies there, and price missed my entry by about 3 pips and has continued to trade lower. So that's a very annoying situation, because if we think about what happened with dollar CAD, why did this happen? It happened because of a Donald Trump tweet, or a, well, not tweet, what is it now? It's a post, isn't it? A social media post. That's why it moved. But if we know anything about Trump, it's he does this to try and position himself and to try and negotiate a better deal, right? Which, if you looked at the reports after the fact, was that I think Trudeau basically called him up and got to give Trump what he wanted. But since then, look how price has just continued to roll over. Now, this was like a panic headline buy. I would never make a trading decision on a panic headline. Not anymore, anyway. Maybe my old former self back in 2016, where I bought gold on a Trump victory, would have done that. Not anymore. You know, to me, I think if you see a headline and it pops the market, you're probably better off. I don't know the data on this, so don't hold me to this. This is not any way advice or anything like that. I just, from experience, price usually reverts that headline news. So take what you want from that. But yeah, I was very tempted to be short this market, and I had an entry here looking for price to basically rebound, and from these highs didn't hit that. I then considered the break here, but again, it started to then come into play of my risk and reward. You know, where was I going to put my risk, which I felt safe? So, you know, here was my other thought of entry. When I look at ATR, it's 13 pips, so above that high. I'm looking at sort of 60, 63, 65 pips. Where's my target going to be? It's going to be down towards 1.4s or, you know, 1.3975s at least. So it just started to become a little bit more of a not worth it situation. But I do like this potential downside here. I think we've got a commitment, a trader report signal for CAD. I think if we started to see oil rally, then I would have been more comfortable getting short on this, but because we haven't and oil has dropped off, I'm not particularly bothered. Yeah, maybe if we can start to break back within this weekly range, you know, back below this, I'd be looking to kind of get on the back of this. I short from 141.50, still holding. Oh, 141.50. You must have literally sold the top, no? 141.50. Oh, what an entry. Ratish, I'm giving my portfolio to you. 141.50. Nice. I don't know what your stop is. You know, if I'm looking at ATR stops, then above the highs, like 40 pips above the highs, I would have had about an 80 pip stop. So you could be at 1.7. Nice. That's a really nice move. Yeah, I like this. I like this. That's a brave. I'll say brave. It's a very sensible move to, if you did it for the right reasons of looking at the headline move and then trying to fade that. Yeah, I mean, I tried to get on the back of it. I just couldn't. Maybe you could have looked at a little bit of a lower time frame. Maybe this break on the lower time frame instead should have been my entry. But I do like dollar CAD short. You know, I've been trying to look at potential CAD entries across the board. One market that we liked last week was Euro CAD short, and last week that performed really well. This week it kind of gave back all those gains and has come back up into the highs there. So, you know, now we've got two situations. We've got a Euro buy signal from the commitment of traders and a CAD buy signal on the commitment of traders. So I don't necessarily want to trade this market anymore. You know, I quite like the idea of pound CAD short as well. I mean, there was these two moves last week that were really nice. But again, prices rebounded. You know, that to me is, you know, I can't get short on that because it's not giving me anything to get short on that. Kiwi CAD, no, because I like Kiwi longs. Where could we buy CAD against? The Swiss franc, maybe. That was a market we looked at, but that's come back within the range. Don't want to be buying. Don't want to be selling yen right now. Aussie CAD, maybe Aussie CAD, but I mean, it's not looking great here if you're an Aussie CAD buyer. But again, that chart just looks a bit messy to me. So no, not a complete fan of anything else apart from the US dollar against the CAD at the minute. So we'll have to keep an eye on it. Euro NOK still moving to the downside a bit. Nikkei's at 1.5%. Gold, I've contemplated a long on gold, but I just, no, the price action just looks depressing. Look at that. I'm sorry, but when you get a aggressive move down and then you get very slow candle, and today I expect a slow candle because it's Thanksgiving in the US, but the previous 2 days, look at the range on those, very shallow. That to me is not, yes, buyers are getting involved. You know, that is not saying that to me at all. You know, usually when you get a big dip and then very shallow candles, it's followed by another big dip. You know, rally very shallow candles, rally, you know, it's all over the place. So that, to me, I do not want to be a buyer of gold right now, because that price action there doesn't look like very healthy if you are a buyer of that market. Silver's continued down. There's not a lot more. I did like nat gas longs. We had a cut signal back in October to be a buyer. I'll be interested to see how it reacts to these highs. Very strong seasonal play in December to be short nat gas, but actually cut reports are still showing quite aggressive longs there. So I'll be interested to see if that level holds or if it breaks. But I'm not going to be trading that right now. Platinum, you know my feelings about platinum. Short signal on the 22nd of October. That's still playing out quite nicely as well. And that's about it, really. That is about it. Let's have a quick look at how Bitcoin's doing. Still going. Yeah, there's not really a lot more going on. It's a bit of a quiet day anyway, isn't it? I was watching the news and saw it zoom up. Stop loss is well below entry, so I have some profit locked in. I love that, Ratish. That's a really smart play, you know. I've talked about this a lot in the past, you know. I think we talked about it when pound yen shot down initially and then it rallied back to the upside. You know, why did pound yen shoot down in the first place? Well, it was because Putin talked about bringing the threshold down of nukes, on when to use nukes, basically. And that's not a sustainable moving headline, right? So whenever you see a headline and you see price rush off, have a little think about why that is. Have a little think about, is it going to be a long-term thing, or, you know, is this just a short-term reaction? And then, you know, you can do, I reckon you do pretty well off of that. Right, guys, there's 25 people in here, so if you could give the stream a thumbs up, I'd really appreciate that. If you are new to the channel, I don't know where you're watching, but if you are new to the channel, come over to YouTube, hit that subscribe button. Might have been at the right place at the right time, just got lucky. Maybe, maybe not. Maybe not. You still took the decision to hit the button. So maybe not. Right. I'm going to leave it there, and guys, thank you everyone for coming and watching again, as usual. But if you could leave the stream a thumbs up, lets me know that you enjoy the content. I'll be back to regular schedules next week. So we're going to be doing Tuesday and Thursday next week. So I will speak to you next Tuesday. I hope everybody has a great weekend. Take your eyes away from the charts a little bit. Decompress, come back Monday. I hope you've had a successful trading week so far. We'll take a look at the Kiwi, Euro, CAD situation next week, and we'll have a little look at the current trader reports, and we'll go from there. So thanks for watching, guys. Appreciate your time today, and enjoy the rest of the week and enjoy your weekend. Cheers.